Thank you very much, and good morning, ladies and gentlemen, and thank you for your attendance at this presentation of Perseus Mining. What I'd like to do today is to present to you one of the more successful turnaround stories in our industry in recent years. At this Denver Gold Forum 12 months ago, I updated delegates on how Perseus had improved production and costs at our Yetican Mine in Ghana in the preceding 6 months. And I also outlined Perseus's plans for transforming our company from being a single mine, single country operation into a multi-mine, multi-jurisdictional explorer, developer and producer of gold. It gives me quite a deal of pleasure to be here 12 months later and to be able to say to you with absolute conviction that Perseus is now well advanced on the path to delivering our vision. And in fact, Perseus Mining has never been in better operational and commercial shape than it is today. In the last 12 months, we've confirmed our clear vision of where we want the company to head. We've established a solid platform in terms of our social license to operate, our physical, human and financial assets from which to implement our plans. And we've established an impressive track record of delivering on our promises, demonstrating our capacity to continue to deliver the plans that we've outlined. What we've not done yet is to see our good work fully converted into share price appreciation. But as you'll be able to deduct from today's presentation, that can't be far away. So to present my case to you in the remaining time, what I intend to do is the following. Firstly, I'll give you a quick snapshot of the company for those of you who are not so familiar with the story. I'll then outline some of our recent achievements as a group, and then speak briefly to each of our assets, our Yetican Sissingué gold mines and our next mine at Yoyori. And then I'll finally present some metrics to support our value proposition. And in doing so, hopefully convince you that, Perseus is indeed a very compelling investment opportunity. But first to our usual set of disclaimers that I'll quickly show and not dwell too much on for too long. So, for those of you who aren't aware, Perseus Mining is an Australian domicile company. We're listed in Australia on the ASX and the TSX in Canada. We're a West African-focused gold producer, developer and explorer. We're a multi-mine operator now in multiple jurisdictions. We have 2 operating mines and are about to start developing our 3rd shortly. We're growing our production level from an amount of 255,000 ounces in fiscal 18 through to about 500,000 ounces a year by 2022. We have a fairly strong balance sheet and very strong cash flow generating capacity, so that the growth profile that we present is definitely financeable without recourse to equity markets. And in order to do this, we've got a very experienced board and management team who have individually and collectively have a strong record of delivering positive outcomes. Our strategy for value creation is actually fairly simple. I mean, operating in West Africa as we are, we do see some volatility in the geopolitics of the region, and so our core strategy is to successfully develop and operate mines in multiple jurisdictions in that West African setting. There are 4 key pillars to what we do, and they are our physical assets, our human assets, our financial assets, and our social licenses, our social license to operate. And within each of these pillars, we've been working very hard over the last few years to ensure that we get the best out of what we have and to produce the outcomes that we have promised our shareholders. And those results have been steadily flowing through. And I can show you there a chart that records what we've done over the last half a dozen or so quarters. And you can see that the maroon bars represent our Yetican Mine in Ghana, and we're seeing steady incremental growth in production and drop in costs. And more recently, we've brought to bear our 2nd mine, Sissingué, which is an Ivorian asset, and it's added quite substantially to that operating performance profile. And most importantly, we've been dropping our cost base along the way. In the current quarter, the quarter of September, we've continued the good work of June, and certainly at this stage of proceedings, we're very well placed in terms of the guidance that we've given to the market. Speaking of which, we guided the market to 130 to 150,000 ounces in the next half year at costs of $952 $11.50 per ounce. And I'm very happy to say that at the end of August, which I fully acknowledge is only 1/3 of the way through that half-year period, things are pointing to production at the top end of that range and costs at the very much below the bottom end of that range. So we have perhaps been a little bit conservative in our forecasts that we've placed before the market, but I guess given that we do know that in the mining business things can go wrong from time to time, we prefer to take that approach of under-promising and over-delivering rather than the other way around. But the point that I'd like to make is that we are very much on track, and this is an important point because put together with our recent history of very good performance and what we're expecting in the near term, it gives us a good deal of confidence that we have the ability to deliver our long-term growth profile. And this is an important aspect of our company, I think, because there are not that many companies of our size who can talk about a growth profile like this, which goes from around the 255,000 ounce level in 2018 through to around the 500,000 mark in 2022 at an all-in site cost of around $800 an ounce. The key point to make about this slide is that this growth profile is based on existing JORC reserves. So this is not requiring us to acquire anything. This is not requiring us to have exploration success, although we do expect to have that. And in the event that we have exploration success, the gradient of that curve will be a little steeper than it is. This is based on existing assets, and what it takes for us to deliver this outcome is fairly simple. It's execution. It's execution in terms of operations, of development and financing. So if we look at each of those key areas in terms of the level of risk to delivering this outcome, I would say to you that our past 6 or so quarters demonstrate quite clearly that we're operating our business very well, and so operating risk is not very high. In terms of development risk, we've developed and delivered our second project, the Sissingué project, ahead of schedule and on budget. And we've taken the team from Sissingué down to our third project, Yoyori. They're both in Côte d'Ivoire, and we're deploying that same level of expertise on the next project. So I think to some degree that minimises our risk around the development activities. In terms of funding, we've got funding very well covered. We're currently in the process of engaging with a banking group, and I'll speak of this a little later, but we're also generating a lot of cash from our businesses. So our ability to fund the growth is quite clear at this stage of the game. And this slide here shows the improving financial position of the company. You can see that on the far left-hand side around January was where we finished investing in the development of the Sissingué mine. And since that time, our cash and bullion balance has been steadily growing, and our debt levels have fallen. And as that shows the position of the company as at the end of July, and I can say that since then the cash and bullion balance has grown, the debt level has fallen further, and we've repaid quite a lot of creditors into the bargain as well. So we're getting our balance sheet very much in order and ready to move to the next stage of our growth. Now, if we look at our asset base as a general package, I said we're focused in West Africa. We're in Ghana and Côte d'Ivoire. That's where our properties are. The two mines that are operating at the moment have got 5- and 6-year lives respectively, although both of those have very much the opportunity to extend that life. The Yetican Mine was our first operating mine. It's a large-scale, low-grade set of ore bodies. We've produced about 1.35 million ounces of gold from the mine to date, and we've got about 1.6 million ounces in reserve, proven probable reserve remaining. So that underpins the next 6 years of life. What we have been doing is working very hard at delivering consistent performance from Yetican, and to that end recently we've updated our life of mine plan, and we'll be delivering a consistent level of production over the remainder of the life at a reduced operating cost, which is obviously very important in terms of our ability to continue to generate cash from this asset. Our Sissingué mine, which is our newest mine, this is the one that we built in Côte d'Ivoire earlier this year. It's quite different to Yetican. It's a high-grade, much smaller operation. It has 400,000 ounces in reserve as we speak at the moment. The operation, the development process ran extremely smoothly, and we were able to put first ore into the mill on 13th of January, pour the first gold 26th of January, passed performance tests in early February, and get to commercial production by the end of March. And I'm very happy to say that since then we've also completed completion tests on our financing facility, which was provided to us by Macquarie Bank, and I would say that we'd be very one of the few businesses that have ever passed a Macquarie Bank completion test, so that's a bit of a feather in the cap. This mine is running extremely well. Not only did it ramp up very well, but subsequent to that, it's been operating very, very well also. It's exceeding all of our technical targets, all of the KPIs. We've been doing so much better than expected. We've had a positive reconciliation on gold for comparing our resource to mill. Since we're about 8% positive in terms of contained gold. We've been getting better grades, we've been getting better recoveries, we've been achieving around 96-97% recovery compared to a DFS of 91. And so all of those sorts of factors contribute to very low all-in site costs and strongly positive cash flows. And when we put that together with the Yetican situation, which is a slightly higher cost situation, we end up with a very satisfactory cost base for the company going forward. This mine, a lot of people were very sceptical about our rationale for developing this mine. Some people thought that perhaps it was a little small for the investment, but we were very keen to go ahead with it. It had a very strong strategic basis as far as we were concerned. Not only are the economics very, very good, but the importance of this project is that it gave us an immediate second cash flow stream, which took the pressure off being a single mine, single country operation. So by having two live cash flow streams, it gave us a level of flexibility, which is very important moving forward. The third aspect of what drove us to do this particular thing was that this was the first time that we'd come to Côte d'Ivoire. And Côte d'Ivoire, as you'd be from the name, is a francophone country. So it's quite different to Ghana, which is a former British colony, and operating in francophone Africa is different to operating in Ghana. So by developing this mine, this gave us the opportunity to gain experience in the country, and then to be able to use that experience as we go forward with our other projects in Côte d'Ivoire. So that was an extremely useful learning experience for us, and we've been able to deploy that learning experience in the progress of our third project, which I'll speak of in just a moment. The final reason for doing this, and a very important reason from our perspective, is that it signalled to the host government and the host community that Perseus is a very reliable corporate partner. And I'd have to say that operating anywhere in the world, but particularly in West Africa, maintaining a strong social licence, maintaining the trust of your local communities is absolutely paramount. The fact of the matter is that you can have the best ore bodies in the world, the most effective people in the world, but if you're not welcomed by the host countries and host communities, then frankly you've got nothing. And so we work very hard at making sure that our social licence is strongly intact, as well as making sure our assets and people are working well. And I think that by going ahead with this project, we've been able to send a very clear signal to those who have welcomed us in our country that we're somebody who is worth doing business with. And that is important because our next asset, our third prospective mine, the Yoyori mine, is also in Côte d'Ivoire. This is a property that we acquired from Amara Mining in 2016. We've since completed a definitive feasibility study that was completed late last year, and what we've been able to delineate is a very economically attractive project, strong IRR, short payback, technically very robust. So we've got good production, about 215,000 ounces a year average over the first 5 or 6 years, at a fairly low cost at $734 an ounce. The project size is readily financeable for a company like Perseus, so running around the $260 million level is something that we can realistically fund from our existing cash and our debt raising capacity. The mine life from the feasibility study was about 8.5 years, but since we completed the feasibility study, we have done quite a bit more drilling around the pit areas, and at the end of October we'll come out with an updated resource reserve statement for Yoyori, which I'm very confident is going to indicate an extension of the mine life. So we'll be around the 10-year mark before we start development. Now, in terms of the development process itself, it is well on track. The granting of the exploitation permit is pending. We should see that any day now. We're about 96% of the way through the front-end engineering and design study. That'll be completed on the 6th of October. And what that's telling us so far is that the capital cost estimate, now that it's down to plus or minus 10%, is very close to our initial estimate. So it'll be somewhere in the range of 260 to 265 million. Crop compensation is well and truly underway, and we're also well advanced on putting together the funding package that we will use to finance this project. Now, on the financing side of things, what our intention is that we'll fund this project through a combination of debt and internally generated cash. We're looking, as far as the debt side of things is concerned, to run two processes in parallel. One is to put in place a corporate debt facility, and the other is to consider the use of potentially corporate bonds in combination with a small revolver. And those two tracks are currently running in parallel, and we expect to have some firm proposals on which we can base a development decision later this year. Now, once we take the development decision and mobilise on site, it'll be about 22 months in order to deliver that project. Now, while we're doing these things, development and operation, we're also fairly busy as far as our exploration is concerned as well. So we do have a good tenement package in Côte d'Ivoire. We're doing greenfields work both in our own right and through farm outs to a number of juniors. We're also working very closely in a brownfield sense, so around our existing properties, both at Yetican, Sissingué and at Yoyori. And I have to say that we're getting very good exploration success on all of those projects, which we would like to think in the not too distant future will result in upgrades of the reserves at all properties. But it is early days in some respects, and far too soon for us to be making very bold statements around the success or the size of the increments to the reserves. Yoyori in particular has been a real revelation for us. I mean, we've been able to, since doing the feasibility study, add quite significantly to the resource, we believe. But in addition to that, we've also been doing some early work on building an underground mine as well at this place. And while it's very early days in terms of that work, it's pretty clear to us that in fact the Yoyori property is going to be a very significant part of our business for many, many years to come. Not just a 10-year life, but we think it'll go well beyond that. So what does all that mean in terms of Perseus's value proposition? If you look at our capital structure, we've currently got a market capitalisation of about 370 million Australian dollars, or 268 US, an enterprise value of about 420 Aussie, or 300 million US. Now, this is for a company that has recently produced 255,000 ounces, that has the reserves, resources, the human capacity, the financial capacity to move into a 500,000 ounce producer in a couple of years' time. So, we think that it's fairly clear from these numbers that at this stage of the game, notwithstanding the good work that we've been doing of late, that it hasn't been fully recognised by the market. And the speaker who spoke just prior to me was a little nervous about putting these sorts of slides up, but this is where we sit relative to our peer group, and the fact of the matter is that we are orientated towards the right-hand end of those curves. And as our moderator here said, when you're in that sort of location, the best way to go is up. And we certainly think that the prospects of a re-rating of this stock is very good, and we think that it won't be very long before, in fact, Perseus is gravitating to the left of these charts. this is a very busy slide, but what it does show is in fact our performance in the last 12 months or so. And what is pretty clear is that, horizontal or flat is the new up in the current market, because while Perseus' share price hasn't actually done a whole lot in terms of rising, it has in fact actually done very well relative to our peer group, and most of those numbers are in red, which is something that we are not so much. So where does that leave us? I guess what I said at the outset is this has been a terrific turnaround story. We've kicked a lot of goals in the last 12 months, and we're continuing to create wealth through steady growth. And the results are on the board. We have the assets fully queued up and ready to go, and we think that the future for Perseus is outstanding, and that this represents a truly compelling investment opportunity for astute investors. Thank you very much.
Great, thank you, Jeff. Now, do we have any questions?
Yes, good morning. Thank you for the presentation. You talk about AISC, the all-in sustaining cost, but clearly there will be capital expenditure, I assume, in addition to that.
On new projects, that would be the case.
No, but I meant existing projects.
In terms of existing projects, that includes all CapEx in the future. So it includes production costs, royalty, sustaining capital.
Yeah.
So in terms of working out notional cash flow from generating from the properties, if you take our selling price of gold, deduct our all-in site costs, you come up with a margin, you multiply that by the number of ounces that we sell, and that is the amount of cash we generate.
Okay. And then looking at the end of your presentation, you had a cash level, but it seemed to, for August 18, but it seemed to have fallen quite a lot, because it excluded the gold bullion, I think.
That's correct. Actually, in terms of showing the definition of enterprise value is cash, not cash and bullion. But where we are at the present time, for a variety of reasons, we're holding quite a bit of bullion, and that does convert. That's readily convertible to cash.
Yeah, but could you just clarify that? Because sometimes it's sort of gold bullion as part of the process and it's part of your inventories.
No, this is bullion in our metal account.
Yes.
And the reason why it's sitting in the metal account is that we're working our processes through repatriating funds into Côte d'Ivoire. This is the first time that this has happened, and we just need to navigate our way through the bureaucracy in order to make that cash flow actually move. But bullion sitting in your bullion account is as good as cash.
Yeah, but is that quite a complex process in the Côte d'Ivoire?
No, it's not complex, but it just needs to be worked through with the bureaucracy.
Okay, thank you.
Okay, thanks. Unfortunately, we don't have time for another question, but thank you very much, Jeff.
Thank you.